Claudio, great to have you with us on the programme. Talk to me about how much you're actually spending on exploration going forward from here at a time when many analysts are quite cautious about the outlook for crude still.
Exploration is still really our focus. Also, if our spending is not so big, it's always about 3.5 billion, but we are very efficient. We have found in the last 4 years 4.4 billion, and most of these are already projects in execution or under FID. And also for the next years we continue. We have to drill about 115 wells in more than 25 countries. So exploration remain one of our main focus also for the future.
Claudio, in terms of exploration, as you look around the world right now, a lot of people would say things are looking increasingly fragile and difficult to operate in. Oil companies are very, very good at operating in fragile environments. Where are you most excited about?
I think that is exploration activities is a long-term focus. So we started a long time ago. For that reason, we put a lot of R&D, a lot of investment, a lot of effort, and also in sourcing of people, and that became our important weapon to overcome this very, very difficult period. Because from our dual exploration model, we got about 10.3 billion euro in the dollars in this period. That helped us a lot. And also a good NPV from the field that we discover, that we have been able to put in production in this period.
Claudio, other peers of yours have been a lot more aggressive with capital returns, not capital spending. I'm thinking of buybacks and dividend increases. How do you weigh what you spend on exploration against actually returning capital back to investors when many of your peers, as I say, have been much more aggressive in that particular area?
First of all, as I told you, our exploration efficiency is very high. So we are spending and we are not spending too much. So our capital discipline is absolutely assured. We are spending about 900 million next year, and our target is to discover about 500 million barrels, so with a very good efficiency of about $2 per barrel. If we have to buy these exploration reserves, or P2, P3 reserve, we have to spend 5, 6, 10 times more. So that means the exploration is also reducing our overall cost that is made by $1 at the moment of exploration, 6 of production and the capex. So I think that the exploration is reducing our capex, and our risk, our ROAS, so rate of success has been very high, about 80% in the last 6 years. So clearly the risk is calculated, and the area where we go, we know very well. And we reduce the risk, and we are using exploration to get development, but also to get return selling stakes. That is our dual exploration model. So I think that through this way, we are reducing risk, not increasing it.
Well, Claudio, just as a final question, Bridgewater, the world's biggest hedge fund, has built up a rather large short position in your company. Have you spoken to them at all?
No, I think that has been a position that adopted for all most of the Italian companies, and they was more, I think, a country issues. And among all the company, they reduce in our company.
Yeah, I recognise that, Claudio. So I guess I've got two questions for you about it.
I didn't talk.
So let me ask two questions about them. One, you're saying you didn't talk to them about it. But the second point is, are you worried that Eni is becoming a proxy for the political instability in Italy?
No, I don't think so. I think that we saw this kind of speculation happen several times in the past in different countries. And most of the time, so a matter of speculation is not a strong signal, or is not a signal that is impacting Italy's credibility, I think.